Hey, welcome, guys. It is Monday night, October 6th, in preparation for Tuesday, October the 7th. And I apologize, I did not pull up the book here. So give me just one second. I will get the Roy Longstreet's book, Viewpoints of a Commodity Trader. We are on page 106. We are on page 106 of 116. So we only have a few pages left here to go. But let's jump into this. Fool's disease. Many who engage in commodity trading are killed by too much attention, too much action, and too little knowledge. There are those who die of too much knowledge and too little action. A trader should be on guard against this illness, particularly after a series of losses. The tendency then is to wait on the next trade until he is sure, 100% sure, that it will be profitable. Such a state certainly is, of course, impossible. It is serious when one comes to believe it is so. He tends to become totally convinced. In such a state of mind, he ignores good trading practices. In the end, this is his Achilles heel. And then weakness develops when one waits for 100% knowledge before acting. Very probably, some some part of the price move has already occurred. The risk is greater if an analysis is wrong. The stop point is farther from your entry. This limits your potential of profit and increases your risk. Statisticians, to their detriment, are subject to fool's disease. They never seem to get enough data to justify a conclusion. There is very good reason for their reluctancy to commit their thoughts. To them, it is more important not to be wrong once than to be right 100 times. Their reputation is like the sun. It takes only one cloud to blot it out. One should not expect to be right every time he trades or makes an appraisal. It is better never to let yourself believe that you are 100% sure of anything. Only then can you feel safe in commodity trading. Plan to be wrong sometimes. The results will be more profitable. All right. The next one is research. Is Mr. Research always right in his market position? No. Well, then, I have as good of a chance of being right as he is. This conversation has occurred many times in thought and speech. It will occur many times in the future. Does everybody have the same chance of success in commodity trading? Who is most likely to be right? Is it blind chance? I have long believed in research. Research is not always right. It does not have all the answers today, but research can help. Each bit added to other bits of knowledge improves our chance to reach excellence. In some ways, our activities are like baseball. The hitter who's averaged 300 plus is more valuable than one who bats 200. Yet, on any one occasion, either may hit a home run. A researcher does not know it all, but he probably has the higher batting average. The manager usually plays the 300 plus hitter. Research is now available to all commodity traders who will use it. Who will use it. All can be 500 plus traders. That is optimum. That is optimum in this league. It is better for the pocketbook if we do not expect perfection. I like those last two about research, work hard, but you're not going to get all your stats right. Sometimes you just have to jump in, getting that idea right versus waiting for that. Oh, here we go again. Oh, the market missed me by a quarter point. The market missed me by a quarter point. It seems like I'm harping to somebody who may not even be listening to this video. All right. Bad research. There is good research. There is bad research. The bad research drives out the good research. To be of any value in trading, research must be very good or it is bad. The reason? In this business, it's the thing that you think you know that is not so that it's the thing that you think you know that is not so that hurts. Good research is not easy to come by. First of all, there are very few trained statisticians who are qualified to do research. I have never seen one short of 5 years of training. In our business, the luster of the quick dollar usually attracts the most capable researcher to some phase of trading. Secondly, one cannot do good research unless he devotes his entire time to it. Much of the so-called research in the area of commodity price is done part-time under pressure by biased minds. Good research meets with great resistance and very little satisfaction. Human nature always takes the position that I am right when things go well. You are wrong when things go wrong. These words from the Sermon on the Mount have greater meaning to the trader who depends upon research. Beware of false prophets. By their fruits you shall know them. A good tree cannot bear bad fruit, nor can a bad tree bear good fruit. Unfortunately, that is the only way most traders identify. Oh, hang on, turn page. That is the way identify good research. Some few, uh, some few look before they leap. All right. The next page I have in here is courage. So we got we're coming towards the end of this book, like I said, so we'll jump into that later, tomorrow night. All right, wanted to start here on the weekly. Point this out again. I pointed out yesterday that we still have some move before we get to the top of this upper Keltner channel. Still room, we could go up before exceeding outside of that. Conversely, our slow line and fast line is showing a little bit of potential bearish divergence on the weekly. So that's something to be aware of there. On the daily or the 1440-minute chart, we have we are 6 days now above the 5 SMA. We've touched off the 4 and 5 SMA, 4 SMA, pop, pop, pop. This is the 6th day close above. Then this is the overnight Globex action so far here. We'll see how that plays out tomorrow. All right, let me get back to my notes here. Don't know where I put my pen. Hang on. I'll get a pen. All right. Yep. So the 1440-minute. Yeah, like I said, just keep an eye on this. We do still have additional room. So far, we are holding above these prior highs here. So that could lead to further upside as a potential there. I'm going to pull over the 65,000 tick chart. We got this here. Okay, so you can see we have this these prior highs back here. This is back in 922. Prior highs came down, up, tested down into those, up, down, up, and then now currently in this Globex session, we are moving back down there. So I kind of have this as marked off as a potential box zone, which is this 6,800 basically down to 67, 53, 54 zone, just kind of roughly in there. So we could be in a box range. If we do lose a little bit of step tomorrow, I would look for a move back down towards closer to this bottom of the box. Or we're right now we're right in the middle. So the whole don't diddle in the middle. Right now we would be guessing as to what the price action will be like if we play in here. So we got to be cautious depending on where we open tomorrow. You can play towards one direction or the other, but if price action just chops around here, we want to be careful on that tomorrow. So that we are in a 3-bar breakout. Let me pull back over that daily. So we are in this 3-bar breakout. This low here from Thursday, this high on Friday, and then Monday stayed contained within those lows and highs. In here and up here. So we're in this 3-bar breakout mode. We also had an inside day. We also had a narrow range 7 day today. So we want to be aware of that. All right. So I showed you the 65,000 tick chart, this potential box range. So we want to be aware of that. I've also got on the 60-minute. Let's pull this up over here. So the 60-minute, I'm just kind of marking this angle up here. We've got kind of this little bit of this action going on here, a little bit of channeling here, upwards channeling. So again, we could move back down towards the lower end of this channel. which again, looking on the 65,000 tick chart, you know, look at those highs versus the lows and see where those zones come in as potential there on the 60-minute. On the gap chart, let me grab that. Okay, what was I going to show on the gap? Oh, I did want to show this. So yesterday or Friday, this is interesting here. So Friday coming into the close, oh, come on. Friday coming in the close here, we were looking at this a little bit of bullish divergence. We did put in a higher, a little bit of a higher low here. So it wasn't a true divergence on that, but we were starting to show some bullish sentiment coming into the close on Friday. We opened up this morning, gapped up, came down, did not do a complete gap fill. This instead is where that 10 o'clock time frame, and we did that little bit of capitulatory volume on the Globex low, Asia and Europe, you know, lows area, and then just started shooting up, you know, 15-minute march up, sideways consolidation, a second march up, and then now a rollover. So, you know, just kind of interesting always to me to look at how we closed at the end of the day, on what picture it's painting on both a 15-minute or a 60-minute on that, you know, on those charts to see what it's painting. So here we were maintaining this positive slow line, you know, coming on this march all the way up here. We still have not dipped down below on the 60-minute, but as you saw there on the 15-minute, it's starting to get a little bit of taper off here. Of course, that's just corresponding with what the price action is doing there into the end of the day. The internals did want to show this. Let's see. We get pretty a lot of overlap stuff drawn on here. Need to clean that up a little bit, but yeah. So I'm continuing to see this this divergence of this VIX slowly making its way up, and the price is continuing currently to still, you know, still climb in the price. So for now, we still have this price climbing up with this VIX continuing to go up over this same time frame. So that's a little concerning, you know, that the VIX, you know, when is the VIX going to win out? So I have, like I said, we're in a 3-bar breakout mode, inside day, narrow range 7-day. All that is a building of energy for tomorrow. I do have, however, I have a buy signal for my 2-period rate of change for the 2-rock on the daily. But I'm taking that with a caution, you know, because we are still in that pretty large 3-bar breakout mode. Yeah. So, all right, guys, don't have an exact direction. I have a couple things here. Like I said, I have a buy signal on that, but there's some other things potentially on this VIX continuing to go up as this price continue to go up is a little bit concerning. I would like to see the VIX really start shooting down if we're gonna start taking out these highs. So I'd really like to see the VIX start moving back down off of this, you know, kind of consolidated slow climb up on the VIX if it's going to validate that. Otherwise, if this price starts shooting down, then I would expect to get another spike up in this VIX to move back up here. So we'll see what happens. All right, tomorrow's Tuesday. Let's trade safe. Let's help each other out. Happy trading, guys. We'll see you in the room tomorrow.